Did the Federal Reserve just make the biggest mistake of all time? What if I told you that their hesitation could be setting up one of the biggest opportunities for crypto? You might be thinking it's just another delay, but stick around because this situation could explode in ways you won't expect. Across the world, central banks are cutting rates. Switzerland's already at 0%, and some even negative interest rates are coming into play. But Jerome Powell? He's holding steady, keeping the federal funds rate at 4.25 to 4.5%. Inflation's creeping down to 2%, but Powell's still not budging. And while other economies are adjusting, the US economy is staying strong, with growth remaining solid. So, what does that mean for you? Here's the thing, it means Bitcoin could be your ticket to a huge rally. Here's a little context. The Federal Reserve hasn't made any rate cuts for months, and they're still waiting and seeing, trying to understand how tariffs and trade wars are impacting things. Meanwhile, other central banks have already jumped in. The European Central Bank has slashed rates to just 2% to boost sluggish economic growth, and even the Bank of Canada is easing. The Swiss National Bank's at 0%, and they've hinted at going even further. So, why isn't the Fed doing the same? Inflation is largely under control in the US, and GDP growth remains healthy, so Powell's cautiousness seems unnecessary. The US economy is growing, albeit at a slightly slower pace than expected. In fact, the first quarter saw a dip, but the current growth forecast for Q2 is projected to hit 3.4%. Unemployment? At a near record low of 4.2%. It seems like everything should be moving forward. But Powell's hesitation still looms. He's hesitant because inflation is hovering just above 2%, not a massive problem, but enough to keep him from acting. He's playing it safe, which is understandable in the current environment, but this hesitation could ultimately create a lot of pressure, especially as the world's central banks start to take action. Now let's talk about what this means for crypto. Here's the key: when interest rates are high, crypto markets tend to struggle. Why? Because the cost of money is more expensive, making it harder for investors to take risks. When the Fed and other central banks cut rates, however, money becomes cheaper. It flows more easily into riskier assets, and that's when crypto, especially Bitcoin, tends to rise. Historically, during the last bull run, the crypto market hit its peak when interest rates were near zero. Cheaper borrowing means more liquidity, more business creation, and more people jumping into speculative assets, like crypto. Let's take a global view. Other major economies are already easing. The European Central Bank has done it multiple times, and so has Canada, New Zealand, and even China. They're cutting rates to boost their economies. Meanwhile, the US remains cautious. But what's happening in the rest of the world is a signal. As these countries loosen their financial conditions, it will eventually put upward pressure on assets like Bitcoin. When rates start to ease in the US, you'll see global liquidity flooding into riskier assets, and crypto will likely get its share of that capital. Here's where things get really interesting. There's a growing sense that the Fed will eventually have no choice but to start cutting rates. Inflation is low, growth is steady, and unemployment is under control. But Powell keeps dragging his feet. Why? He's worried about long-term inflationary pressures and the consequences of tariffs. But even within the Fed, there's rising dissent. Governor Michelle Bowman, for example, is in favor of a rate cut if inflation stays stable, and even Fed Governor Chris Waller has hinted at the possibility of cutting soon. Now, let's talk about why this is such a huge opportunity for crypto. As central banks around the world ease, liquidity is starting to rise. Global M2 is pumping, which means more money is flooding the markets. This could create the perfect storm for Bitcoin and altcoins. As we've seen before, when money becomes cheaper and more accessible, the flow into speculative assets, like crypto, will increase. And here's the thing, Bitcoin isn't like it used to be. It's now seen as digital gold by Wall Street and even some countries. It's becoming an established, institutional asset, and that's going to make it rise higher when liquidity starts flooding in. So, the Fed might be hesitating, but the global liquidity tide is rising. Bitcoin is already making its move. Altcoins are lagging, sure, but once the liquidity starts really kicking in, it won't take long for them to follow. We're entering a phase where the global financial system is shifting, and Bitcoin could be at the forefront of that change. The Fed's hesitation could be your opportunity to prepare. As soon as they start cutting rates, it could trigger a massive rally, not just for Bitcoin, but for the entire crypto market. The fuse is already lit, and once the Fed starts cutting rates, you'll want to be in position. This isn't just about Bitcoin, it's about the entire crypto ecosystem. Altcoins, tokens, and DeFi projects will all benefit as the floodgates open. History tells us that rate cuts often set the stage for explosive moves in crypto. The question is, are you ready to capitalize on this? Because when the money starts flowing, it's going to get crazy, and you don't want to miss out on what's coming next. The opinions and information presented here are for informational purposes only and do not constitute financial advice. Please conduct your own research and consult with a financial advisor before making any decisions.